Good morning, traders. Chris Buss here with your morning look at markets for Tuesday, June 15th. Hope everybody had a good evening. Let's take a quick look at futures. Equities are flat as a pancake. Precious metals are flat as well. Copper's down a whopping 4%, while oil is up 0.5%. On the macro front this morning, we've got retail sales, Empire Manufacturing, producer prices, industrial production, red book, and a read on the housing market. So we got quite a few little data points today on how the real economy is doing. And then, of course, the big event that'll kick off tomorrow at 2 p.m. is the FOMC rate decision with the release of the statement at 2 p.m. and then Jay Powell at 2:30 with a presser. There's been a big rotation underway as rates have been falling, pinned down. You'll recall we had the spike in March at 175 on the 10-year, and it's really been falling ever since. Now we've lost 150 on the 10-year, and now we're down in the low to mid 140s in terms of yield. A real important level to watch on the 10-year yield is 1.4%. You break below that, then the next level of support is at 1.20. And if we saw that happen, you'll see an accelerated move, I would imagine, into tech. As it is now, what's working? The bubble stocks, EV, solar, and the Fat Man complex is waking up. We'll get into that this morning with Facebook, Apple, Google, Amazon, Microsoft all starting to work. There were also a decent-sized move in Netflix that you probably noticed. Tesla's hanging in there, haven't had the explosive move yet. But on the flip side of that, what's not working? Money just as fast as it went in is coming out of the cyclicals. Financials are on the edge of breaking down. In fact, some of them have broken down already. JP Morgan was down about 2% yesterday. That's the biggest component of financials. So the banks, what was good on the way up, rising interest rate environment, is now a headwind with falling rates. So industrials, money is coming out of the industrials. I'm going to show you a slide this morning on housing, ITB, the ETF that comprises the housing stocks. It has broken down. And if you flip through the individual components of the housing trade, Lennar, D.R. Horton, Pulte, KB Homes, etc., they've all either well on their way to breaking down or are beginning to. Of course, there's always a distribution of stocks that are leading either on the up cycle or the down cycle. But the point is that money is coming back out of the reopening trade and plowing back into tech. So let's take a look, see what we can find out. Starting with the SPY 2-hour. And also for new users, feel free to run the video at 1.25 or even 1.5x. That way you'll be able to speed up the video and cut the run time. And of course, you can pause at any moment if you want to take a note for later today or backtrack and re-listen to part of the video. So, anyways, SPY 2-hour did a whole bunch of nothing until right at the end of the day, and then a big power candle taking out the prior highs. I think what you can do now on SPY is just rotate up your pivot to this 424.25 and then look for higher ground. I've dropped in a little channel here. You may see some hesitation here at 426 at the top of the channel. And also remember, we've got this technical target at 429, which came off the measured move off the double bottom that we've had really almost a month ago. So that remains a technical target at 429. Let's look at the 30-minute chart. Here you can see the off of the low. Yesterday we had some movement up, and then in the final half hour it really ramped. And just to share some ideas with you, because this came up in the trading room yesterday. Up until the very end of the day, if you were trying to trade SPY, very frustrating day. Because nothing was really happening for so long during the day until the end. There were a number of traders that were involved, early in the day. And then when they got this candle, this little, first little up move, they sold out thinking, oh, wow, now I'm up a little bit. I got my money back. The market hasn't been doing anything all day. And so I'm out and thankful that I made a little bit of profit. And then, of course, you get the big power candle into the close. And then, of course, the traders are saying, wow, I could have had a double. I could have had a triple. I could have had a quintuple had I just stayed in. And I think, well, two things. Time frame. If you were in a daily option, buying in SPY, you can buy an option today for today, or you can buy, yesterday was Monday, so you could have bought an option for that day, Monday. You could have bought one for Wednesday, and then you could have bought one for Friday. So time frame is important. And if you're in a daily option that expires today, you can't wait around for this bar. Now, if you were in Wednesday's expiration, you could have. And certainly if you were in Friday's expiration, you could have. So what I like to do, and I'm not saying it works or that I know everything, but rarely ever do I buy an option that expires the same day. The only time I really do it is on a Friday afternoon lottery ticket situation where I only buy what I'm happy to lose, and that's it. You wait for that kind of a move, and then you get a big payday on your lottery ticket. But if you were involved down here and you had Wednesday or Friday's expiration, you weren't making any money, but from a technical standpoint, you were fine. There was no reason to exit. Why? Because price had not violated 423, which was what we had identified as support. So while you're sitting there, losing patience because nothing's happening, or you're losing a little bit of time decay, from a technical standpoint, nothing was different. And then so you just hold on, and then you were ecstatic that you had that move. So when you're starting your trade, I think it speaks to the trade plan and the time frame. When you buy an option down here, maybe your trade plan was, I'm long against 423 and I'm playing for a move back up to the highs at 424.25, and then I'll evaluate if I get a move back up, just like from here to here, you evaluate, you either take it off or take half off and see what happens, or you close it out, or you say, you know what, I want to hold it because my expiration is Wednesday. I think there's more. I think there's going to be a drift into FOMC. And then you hold on. And then you would have gotten that. So that's all backseat driving. But put together your plan and then kind of use that as a roadmap. And when you're stuck in a situation where price isn't moving, that's a patience test. That's not a technical test. That's a test of your patience as a trader. And so differentiate between the two. A technical breakdown where you have to exit versus a patience breakdown where you just get frustrated, nothing's happening, and then you just close it out because you're bored or you're tired of looking at it or you think you're in the wrong trade. So anyways, moving on quickly. QQQ 2 hour. We broke out to new highs, blue sky above. Stay long. You can trail your stop up, however you want to play that. But now we have broken out up to blue sky territory. You can see the rising channel we had in place. I think what you can do is move up your stop, depending on your time frame, of course, and what you're trying to do. I'd move your stop up to 343, which was the open yesterday, the bottom of that candle, and that corresponds with this little cluster there as a support level on any kind of pullback. And if you do get a pullback to 343, I'd be a buyer there. Just remember, we've got the FOMC tomorrow. You should be deciding today how much risk do you want to carry into Jay Powell, right? Because there's always that probability that he either has a gaffe or a bombshell, right? He either lets something slip or he says it awkwardly and the market starts selling off, or he has a surprise new piece of information and then you get that massive red bar. I think if he says nothing and the market takes it that way, we grind higher. I don't think there's going to be some gigantic candle. So I think you've got to gauge what kind of risk appetite you want, not only in your fast moving trades, but also your position trades. If you're loaded to the, absolutely loaded to the gills, maybe you want to take some of that off or move up strikes and stuff to make sure you've taken a little bit of risk off the table. IWM 2 hour. Now, as the Qs lead, IWM is going to lag. Why? Because IWM is loaded with financials, cyclicals, all that kind of stuff that is now seemingly rotating to the back seat. So I doubt you'll see IWM and the Qs racing higher at the same degree. I think there's going to be a lag now in IWM, and we can use IWM as a canary in the coal mine when we start seeing, or if we start seeing, the Qs back off and IWM reasserting itself. That'll be a heads up that the rotation back to cyclicals and industrials and all that kind of stuff will be back underway. And I would almost bet that you would see a rise in interest rates on the 10-year bond accompanying that move. So today, I think as long as it holds 230, I think the bulls are okay. But you get down below 230 and certainly below 229, if this gap fills, then you're going to see more of a pullback. So I would be ready for that as part of your active game plan. And I think there may be an opportunity for a pairs trade, long QQQ, short IWM, if that rotation accelerates. But go level by level regardless. Here it is on the 30-minute chart. You can see that opening high, they faded it the whole day until the final 30 minutes where you got this larger sized green bar. But you can see price stopped right on the opening gap. Okay, jumping into FATMAAN. Pretty good day for Facebook. Back up at the prior highs. Now what you want to see here is price breakout to new all-time highs and take this high out. Why is that important? Because if it stalls right here at the prior high, you've got negative or bearish divergence in place, and then that would look like a double top. So just from a technical standpoint, when you see a double top or even a double bottom and you've got divergences in place, that's, when you're at a double top, that's a warning sign, especially when you've got bearish divergence in place. What the bulls want to see is a breakout to the highs, and then these bearish divergences burn through. What do I mean by that? That momentum continues to take out this trend line and rotate up. And similarly with RSI, a breakout above this downtrend line and a move higher. If you see that, then the bearish divergences take on much less importance with price breaking out to new highs. I was really impressed with Apple yesterday, and I think from a trading standpoint, we had it perfect. We had it absolutely perfect. We said, knock yourself out down here if you want to trade this range between 128 and 124.50 with this 126.5 as a pivot point. But we said, in order to get a bigger move and a more important move, we want to see 128 impulsively taken out. Why? Because it's been a big level of resistance. We have the converging 20 and 50 EMAs on the daily chart, and we said if price broke above 128, and depending on your time frame, from buying weekly options and looking for a move higher, or more swing or position traders, that would be your key to get long, because all these daily moving averages are now support. We came up impulsively and never looked back. We blew right through this gap. Now we're above 130. I think 130 is your new pivot for active traders. We've got an open gap at 131.25, basically a dollar wide up here to 132.25. You may see a little hesitation right here. First touch gets rejected, and then second try goes on through. And remember, there may be a little less impulsive moves today as we get closer to the FOMC. I think the market will go into sleepy mode just to wait and see what happens tomorrow. But this was a big signal to get long, and that's the way I'm reading it. Here it is on the daily chart. We were down here thrashing around. Big impulsive candle. Notice all the moving averages here. 8-day, 20-day, 50-day, all taken out. Now there's open running room to 134.50-ish right there at this prior high. And then that'll be a test to, break out and then go to all-time highs if things continue to be positive in the marketplace. Tesla, not a lot happening. I don't think my commentary is any different. Bulls got to see 625 taken out and the downtrend. But really, I think the move would start on a move above 640. Decide now how you want to trade it, because you got to do one of two things. Either say, I want to get long it when it takes out 625 and I'm playing for 640, that as a first target, or you're saying to yourself, I want to let price prove it. I'm more of a swing trader anyways. I'll wait until 640 gets taken out. Then I'll think about getting a longer term position. So what you don't want to do is, take a position in the mid 630s, because then, you're in the middle of the range and you could see a pullback. But so I think 625 and 640 are the key levels. Speaking of frustrating, it was yesterday was frustrating for me. I'm long Microsoft calls looking for this gap fill, and it just did nothing all day until the final candle, and then I got a nice push. So I'm looking for 262 here, and I do want to show you the daily chart really quick. That was 262 is right where the prior high was. That's where the gap came. So let's say you missed all this. I would alarm the prior high, 262, or the top of the gap, 262. And then if price takes that out, then you can get long for blue sky country and all-time highs. So I would put an alarm there, because I think if the tech trade is working, Microsoft is going to work. Apple is going to work. Amazon is going to work. Speaking of Amazon, impulsive candle out of the gate, bookend impulsive candle into the close to almost close this gap up to 33.86. We're sitting at 33.84. So my expectation is this is going to fill, and then it's going to work its way up to 3,400, and that'll be another big pivot point on Amazon. This is another one where we had it, nailed from a technical analysis perspective. Why? We had this trading range down here where 3250 was the top of the range, and we said we had that confluence of moving averages. The 8, the 20, and the 50 were all piled up at 3250, and we said if it can take that out, it could have some real running room, because then all the moving averages will be support, and you'll also have technical support at 3250. So hopefully you had a game plan put together for Amazon, and now we're up to 3,400 more or less. I think, barring any disaster tomorrow on FOMC, I think the next technical target is 3550, and then that will become another big test, because at that location, it's run up there, had a run up here close that failed, and had a run up here that failed, and most recently here it failed. So that 3550 would be an important level that even if you didn't do any of this in here, and then we broke above to new highs, you could anchor your long right here at 3550, and then I would imagine you're looking for 4,000, honestly, at that point. So Amazon looks good. Google continues to look good, taking out the all-time high from back here and taking out the earlier high here. So now we're in blue sky territory. I think you keep your pivot at 2430, and you're looking for a move up to the top of this channel, up towards 2470, 2480. So Google looks really good. Netflix actually had a little bit of a power move on its own, broke this downtrend line with conviction, popped 492.50, then popped 500, which would have been pretty significant resistance because we had 500 here, a big cluster, and a big cluster back here above 500. So for that to power up and get back above 500, that's important technically. Now I think you can be long against 500, looking for 507 and then 515 at the gap. And you've got a $35 gap up here where you really would want to be long, even if you didn't participate in any of this stuff. Getting long into a $35 gap would make sense after all of this basing action down here that took months and months. Semiconductors. Make note, I had a mistake yesterday on my chart. I had said 256 was the target. It's actually 258. That was the prior high. Make a note on your chart if you had that or if you're actively trading that. But we got the breakout above 252 and then an impulsive move higher. I like semis. There's nothing in the chart really not to like. PPO is turned up. RSI is bullish. So you could trail a stop. If you got long at 252, you could move your stop up to 253.50 and then look for higher ground. I want to show you just a couple of stocks here. We talked about copper being down 4%. Freeport, McMoran, FCX is starting to roll over. And I mean, with copper down 4% this morning, there'll probably be a big red bar. I am still of the belief that despite this corrective activity across the board in commodities, that's all it is. That we're in a bull market for commodities led by copper, and I want to keep the copper stocks and the basic material stocks in focus, and with the belief that they're going to find their level and then they're going to turn up. I'm not really interested in trying to short FCX here, but if you saw 38 break from a technical standpoint, not a lot stopping it from going to 34. And if I see that, I'm putting an alarm here. I'd be tempted to take that trade if price comes down and breaks this horizontal level of support. We're below trend, rolling over, RSI below 50. At that point, you'll probably see momentum drop below 0. So that would mean, the indicators are supporting a move lower. And if I saw price break 38, I think you could get short there if you're interested in taking that trade and see if you can get a run to 34. And who knows if it's like a big correction, if tech takes charge, the rest of the summer could come in for a tag of the 200. Who knows? Home builders. We pointed out this chart the other day. It continues to grind lower. Now you've got a support level at 67. If that breaks, I think here comes 64. So a short on the home builders is or has been certainly working. And if you wanted to mix in a short with some of your tech longs, I think a break of 67 would be the place to do it. And if you just look at this, if you put this on a 60-minute chart, you've got the first leg down, then you've got a bear flag. And if you take that measured move of this first move and add it on to the bear flag, you get pretty darn close to 64. So that would be my first technical target on a breakdown below 67. And then here's LPX. Louisiana Pacific. If you look in the building materials, looks just like the home builders, as you'd expect. All that stuff is pulling back. Caterpillar, Deere, industrials like that, they're all pulling back. So that's part of that rotation that we were talking about. So those are some charts to look at. I'm gonna go through and do some work today, as I expect it's going to slow down a lot in the market, and look for some setups that we can zoom in on after Powell. If you're like right now through Powell, I would be, thinking about just like what I said as a recap. How much exposure do you want going into Powell? And I wouldn't be loading up on risk, heading into that event. It's almost like an earnings event for the whole market. And you know how I feel about earnings events. I would be looking at my risk level real carefully. If you're committed to a name and you're not worried about a little extra volatility, that's fine. But I wouldn't be sitting here the day before FOMC saying, oh, there's a great swing long and here's another swing long, and just maxing out your portfolio the day ahead. Why not do it after? And remember, we got quad witching on Friday, and so there's a lot of forces at work there as well. So by all means, I want to make a shopping list. I gave you a ton of setups yesterday, and if you are new to the channel, go back and watch yesterday's Before the Bell. I put out 5 or 6, maybe even 8 different charts with levels, and you can revisit those if you care to for additional trade ideas. So let's wrap it up there. If you're new to the channel, please hit the subscribe button and the alarm bell. You'll get all my content. You won't miss a beat. You can also look over in the show notes. I've got a couple links there that I think you would find interesting. And to my longtime subscribers, thank you very much. I hope the commentary and the levels are helping in your trading. And I really appreciate your support. Please pass the link along. Hit the like button. It helps me and others know that you value the content and that it's helping you in your trading. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.